Like my intro says, we need to see an increase in savings and investments to levels of about 30% in order to achieve a 10% targeted annual growth rate. We know that growth rates right now in Kenya are sitting in the one-digit level. What needs to be done in order to reach that 10% level?
Yes, thank you. A lot needs to be done, but mostly is to encourage savings by having more saving products apart from the traditional insurance policies and mutual funds, commonly called unit trusts in this environment, but more work on having products which attract funding and savings from the informal sector to the banking system.
Let's look at FDI inflows into the Kenyan economy. Talk us through how well positioned is the Kenyan economy in attracting a foreign direct investment right now?
Yeah, Kenya sits in a very attractive position at the moment, regardless of a looming election event in Q1 next year, mainly for 5 reasons. One, the government of Kenya has just approved a draft law to create an international arbitration center for international commercial disputes. That means multinationals can feel free to invest in this country or bring in foreign capital and be sure of a framework of resolving business or commercial disputes easily and locally. Secondly, the country has over the last few weeks received favorable, stable ratings from the 3 major rating agencies, that's Moody's, Fitch, and S&P. The ratings are showing the country to be a stable environment for economic and political environment to invest for the future. And thirdly, the country has had now a sustained over 36 months in heavy investment in infrastructure, both road, rail, and air, and that is making Kenya a regional hub, either for manufacturing, financial services, or otherwise.
Indeed.
Fourthly,
you can go ahead.
Fourthly, again, Kenya is sitting well to attract foreign direct investments by the mere simple fact it has adopted a new governance system which will decentralize government spending through public-private partnerships in other regions of the country apart from the capital city, Nairobi. That makes other parts of the country with their own strength to enter into economic and international development agreements to develop any resources required. And then lastly, Kenya sits very well from an FDI perspective because over the last few months, again, the country has discovered huge resources of natural gas and oil, implying that very soon international oil majors will be looking to sign contracts with the government to exploit these resources.
And looking at that natural gas and oil investment coming through for the Kenyan economy, how much of a shift do you see this having in terms of foreign direct investment and the kind of funds that it will perhaps be bringing into the economy?
The shift is in 3 ways. One, it's from a sectoral distribution, slightly away from services sector to now more productive sectors, targeting exploitation of the natural resources discovered. Secondly, regional shift, where the capital city has essentially absorbed over 60% of FDIs in the country. We expect other northern, southern, and eastern parts of the country to attract the same. And thirdly, the shift is towards enabling the country to attract foreign direct investment targeted to the regional East African countries by first having the capital from foreigners coming into Nairobi, setting up a hub, and the hub in Nairobi or in Kenya being used to reach other East African markets.
And let's talk on some of the main countries. You've talked a bit about some of the countries within the region in terms of foreign direct investment. But let's talk on some of the main other countries, like we know that the UK is pretty prevalent there in Kenya. Talk us through some of the other companies or countries which have brought a significant amount of foreign direct investments into Kenya.
Yes. You're right. The United Kingdom and Europe in general has been the source of the huge amounts of foreign direct investments in the country, and foreign direct investment still lags behind other sources of foreign exchange, like horticulture and agricultural products like tea and coffee, plus diaspora inflows. But other countries within East Africa which have enjoyed a healthy flow of FDIs includes Tanzania and Uganda, both because of their huge resources in mining and lately oil in Uganda.
And let's talk on mergers and acquisitions over there in Kenya. What kind of activity are you seeing on that front? We know that there have been somewhat weak levels across across the globe, given the current economic crisis that we're sitting in.
Yes, there's been quite an increased M&A activity in the region, but more specifically in Kenya, being the financial hub of the eastern part of Africa. Most of the mergers and acquisitions have tended to focus on financial services. That's the banking and insurance sector. We are aware of a huge interest to Kenyan banks and insurance companies by multinationals, especially the non-listed banks and insurance companies, which have been able to attract a private equity capital as a route for having those businesses actually listed to the local Nairobi Securities Exchange.
Well, we are at the end of the year now. We just want to get your outlook for foreign direct investment in Kenya going forward.
Yes, to a large extent, 2011 was a good year for the country. The country was able to attract just over $15 billion of foreign direct investment. We expect that to be sustained in 2012, just as the same way diaspora inflows were resilient, although in September slightly down. The outlook for foreign direct investment in Kenya, regardless of the elections expected in Q1 of next year, is very positive. I say positive because there's vibrance in business activity, both from an economic and from the capital markets perspective. Business and companies are raising equity and debt capital, both from locals and foreigners. And we expect that capital to be plowed into businesses from Q1 next year, and by extension attract more, given that the environment, both politically and economically, looks very stable and actually positive. Will be positive more if the upcoming election are done and dusted in a more smooth, peaceful, and efficient manner.